So, you guys are getting my live reaction after earnings. Q2 numbers are now officially posted. And wow, this is a complete shocker to me. If you guys heard me in a previous video, I said that this probably wouldn't happen as I was addressing postpaid churn and AT&T having the lowest. T-Mobile now has the industry-leading postpaid churn at 0.77%. I did not expect that at all. I didn't expect it this soon, but people are taking to the product. They're taking to the network. They like what they get. They like the value. They like the price, and they are staying. So this is my live reaction. I'm shocked. Lost for words on that one. Wasn't expecting them to have the lowest industry churn this soon. I thought maybe sometime at the midpoint next year they would work their way down, but they dropped year over year big time. So T-Mobile delivers industry-leading growth in customer and profitability in Q2 2023, raises 2023 guidance again. So once again, it was another raise and beat quarter. That's big for the company, and it should get people excited that are investors. Un-carrier reaches another milestone with the lowest postpaid phone churn in the industry for the first time ever. In the industry, they have the lowest postpaid phone churn. That is a big milestone, in my opinion, while delivering the highest Q2 postpaid phone net adds in 8 years. So they hadn't had this big of growth since the Un-carrier days when John was the CEO. So we'll go over this briefly. I wanted to get in more into the financials, so this is going to be a longer video. Make sure you guys stay tuned, grab your snacks, popcorn. This is going to be a good one. So postpaid net account additions of 299,000, best in industry, shows that families and switchers are choosing T-Mobile. They stated that very clearly during the earnings call. Postpaid net customer additions of 1.6 million, best in industry, and they're raising that guidance again for the year. Postpaid phone net customer additions of 760,000, best in industry by far, and best Q2 in 8 years. So they beat AT&T and Verizon by far, and of course they beat them combined. Postpaid phone churn at 0.77%, best in industry for the first time ever, and a record low for the company. That's big. I want to see if they can sustain this momentum into Q3. Maybe they can get it even lower. It's a possibility, but we'll have to see when Q3 numbers are released. High-speed internet net customer additions of 509,000, more than AT&T, Verizon, Comcast, Charter combined for the 5th consecutive quarter. Now, here are some of the financials that I wanted to look into to see if it kind of matched the amount of growth. So they had a service revenue beat. Service revenue of $15.7 billion grew 3% year over year, and postpaid service revenues of $12.1 billion grew 5% year over year, both best in industry growth. So they're growing on that front too. And that will, don't look at it as just today. Think about it, what those numbers will look like in the future as they continue beating quarter after quarter. Net income of $2.2 billion grew 2.3 billion year over year, and diluted earnings per share of 1.86 grew 1.95 year over year, best in industry growth. So again, growing there too. Not anywhere close to the competition, but they continue getting better. Core adjusted EBITDA of $7.3 billion grew 11% year over year, best in industry growth, and raising that guidance again. Net cash provided by operating activities of $4.4 billion grew 3% year over year, raising that guidance again. Adjusted free cash flow of $2.9 billion grew 64% year over year. So AT&T was at like 4.2 billion and Verizon was at a little over 5 billion, if I remember that correctly. So again, T-Mobile closing the gap there too. Still got some work to do there, but they're getting better, and they grew 64% year over year on free cash flow, which allowed them to do the repurchased 25.2 million shares of common stock in Q2 for $3.5 billion. That's what that allows them to do. And as they continue, as they stated during the earnings call, as they continue to grow the free cash flow, which will allow them to do more buybacks, invest in spectrum, invest in value creation, whatever they decide to do, the free cash flow makes them very flexible. Ultra capacity. They are now at 285 million pops covered with 2.5. That's about another 15 million pops left to go to get to 300 million. They do that, I think, very comfortably by the end of Q4. I think they probably get there sooner, but they're giving themselves a window in case there are any issues. There's, of course, some weather complications that could come, winters in Q4. So, but I think they get there very comfortably. So not much left there. They have, I'm sure they got some Sprint keep sites that are still left to be done, some new coverage sites that need to be built, but they're at 285 now, up from 275 million in Q2. So they're moving at about a pace that's needed to get to that 300 million pops. Give or take, you could say they can get there by the end of Q3. They've been growing about 10 million pops per quarter, but I'm sure they're giving themselves some space, and then potentially they do a under promise, over deliver type of situation and announce it sometime in the middle or end of the third quarter. It's a possibility, but just throwing that out there. So now we're going to get to the increases in the guidance. So they did also, I want to throw that in. It's not a real big deal in my opinion, but they increased CapEx by about 50 million at the midpoint. It looks like the total CapEx increase is 100 million. They're going from 9.3, 9.7 to 9.4, 9.7 billion. So that's good to see. That's something that I anticipated. I told you guys I would not be shocked if that happened, but it ended up happening anyway. So the guidance for 2023, which is very important to look at because they did a raise and beat on the financials as well. So postpaid net customer additions were expected to be between 5.6 million and 5.9. They're now increasing. Well, they're increasing that from the prior guidance 5.3 to 5.7. So again, they're increasing their postpaid ads, and they're expected to come in at 5.6 to 5.9 million, which sounds right around in line with what they did last year, which was a record-breaking year for the company. Core adjusted EBITDA, which is adjusted EBITDA less revenue or less lease revenues, is expected to be between 28.9 billion and 29.2 billion, an increase from prior guidance of 28.8 billion to 29.2 billion. So again, another raise and beat. Merger synergies are expected to be approximately 7.5 billion, an increase from prior guidance of 7.3 billion to 7.5 billion. So that's good to see. So one thing that I want to also look at here is the CapEx. So that's expected to increase between 9.5 billion and 9.7 billion, an increase from the prior guidance of 9.4 to 9.7. So again, they have some room to play within that 9 to 10 billion guided CapEx. So they could literally spend the entire 10 billion if they needed to, or they could come in at the lower 9 billion. But it looks like, based on some competitive pressures and stuff, they incrementally raise CapEx. I do anticipate that to happen again. Verizon's coming, so they got to push. And then again, adjusted free cash flow, including payments for merger-related costs, is expected to be between 13.2 billion and 13.3 billion. Adjusted free cash flow guidance does not assume any material net cash flow inflows from securitization. So that's big, right? They're expected to be at that window of 13.2 to 13.3 billion on the free cash flow. Again, for the quarter, they had a 64% increase. They made $2.9 billion of free cash flow. For a carrier that charges way less, that gives away free lines, that does insider discounts, I think that's a hell of a number in my opinion. And they are expected to continue growing that free cash flow to 18 plus billion by 2026. But they guide conservative. So my guess with the new 5G Go plans, the expected a little over 1% ARPA increase, I think they can get to that $20+ billion range on free cash flow. Now, just some of my takeaways to close out the video, stuff that was talked about during the earnings call. Port ratios have continued to get better against the competition, including cable, and of course that's AT&T and Verizon, year over year for 9 straight quarters. They also signaled a huge impact from the Un-carrier phone freedom. They said that it overwhelmed them with the response of people wanting to go from 3 years to 2 years. And that immensely helped with the port ratios, bigger than they ever expected. So I look forward to hearing more on that. They didn't give any numbers, but they say the port ratios are big on that Un-carrier move. So that's good to see, right? That's good to see that that those Un-carrier moves are still affecting the business in such a positive way that they can still do this type of raise and beat quarters, quarter after quarter. So that'll tell you that Q3 should go very well, and they will likely have the leading growth once again with year-over-year growth on the financials. So the service revenue beat is very interesting. That was discussed during the call because that's leading them to cash generation, and it helps boost the free cash flow. So I would anticipate that in the third quarter, the free cash flow is over $3 billion for that quarter. I don't want to give an estimate yet. I want to see, the quarter just started. I want to see if T-Mobile makes any changes. So we'll talk about that later on in the quarter. They also talked about the free cash flow. Again, it is going to be at the 13.2 to 13.6 billion. Gives them the ability to compete however they see fit for any quarter. Need more value creation, they can do that. They feel comfortable right now with the Go 5G Plus. They say, John Fryer, he's the CEO of Consumer. He said over 60% of customers that came on board in the second quarter chose Go 5G Plus. So they don't feel the need to, make any changes right now. Looks really good. They continue to impress the market. Also, any free cash flow, any related costs, they already said C-band was added in. There is a C-band payment from the auction due this year. So there shouldn't be any changes to their financial guidance based on that, because they said in the Indy guidance, they already included that C-band payment. So this is good. This is good for competition. This is good overall, right? Home internet customers are enjoying it. They still added very confidently that the churn is lowering as it matures. They said that at conferences recently. They're saying it again during the earnings call. So that's a good sign. That's a good sign for T-Mobile, a good sign for the industry overall that fixed wireless is here to stay from T-Mobile and Verizon, and that cable needs to compete better to get those customers back that they're losing. So very interesting quarter, right? This is the midpoint. We'll see how Q3 and Q4 go. I think they will have exceptional Q3s and Q4s. They have the lowest churn in the industry. That's a big deal. And I think a lot of people will downplay that. That is a big deal. That's a big deal. If they can maintain that, they will continue growing. They will continue to post better financials. And I think it will put Verizon and AT&T in a world of hurt, because now they have to figure out, how do we get switchers from T-Mobile? They will have to compete differently if T-Mobile continues to be the leading churn profile in the industry. That's what that will create. They will have to figure out, they will have to run analysis on how to get people from T-Mobile. Another thing that I wanted to point out too, the wholesale business for T-Mobile, it's steady. They're not losing on the wholesale revenue. They're not growing, but it's steady. And that's something that they alluded to, Verizon having all these MVNO partners in cable, and their wholesale revenue is not growing, while Comcast and Charter and all these cable companies post some of the craziest growth that cable has ever seen, but yet Verizon's wholesale rates are not growing. So that's very interesting. Something that I wanted to just throw in to keep an eye on for the next quarterly earnings. So we'll definitely Stay tuned for, Q3 has already started. We're already almost a month in. So we'll see what August brings. We'll see if there's any major changes. I do see Verizon's recent move, the NFL Sunday Ticket on us. I see that having an impact. Although they disclose it's limited, they are pushing advertising for it now on a national scale from what I'm told. But it is limited time offer. So I don't know. They're not going to run that the entire quarter. So the ports might shift a little bit. But I think once that's done, I think it goes back. The port ratios go back positively towards T-Mobile. So make sure you guys stay tuned for more. Let me know in the comment section how you feel about it. Like, share, subscribe. See y'all in the next one. Peace.